Okay, we're back with the next video, and in this video, we're actually going to talk about, trading this method, and I already went over the basic rules of it in the previous video, uh, and it is quite simple. So what we're really going to talk about, spend most of our time talking about, are the traps that can be set up, and the ones you want to avoid, where you might get a signal, but you'd be better off waiting until you have some confirmation that the signal is actually going to be solid before you jump in and risk any real money. As I mentioned previously, what you're looking for here is the cross of the two lines on the MACD, the two-line MACD. Those are your signals, and when you get that cross, you basically just jump in, and you're looking to buy or sell, and you're looking to hold on for 10 or 20 pips. Back here around 8 o'clock this morning, I was on, let's see, on this box right here. It was 8:21 this morning. You got a crossover on the MACD. You got a sell signal. You're paying about a 40 to 50 cent commission, or spread rather, when you trade gold with just about any broker. Certainly with FinFX and with Talinex you are. So if you sold right here, you got two full boxes formed. It actually went down a little bit farther than this before price turned around and came back up. But essentially you're looking at 14 pips, about 5 of which is going to encompass your spread. So you still had 9 or 10, 11 pips that were gained on this before price turned around and went back. Of course, when it turned around and went back, you were back to break even with actually a small loss because you still have your spread to deal with. So if you had not gotten out at plus 10, if you decided to hang on to see if you can get any more, squeeze any more pips out of it, you probably would have closed with a small loss. If you were looking for plus 10, you got it. You got it right here, and now you sit around and wait for the next signal, which thankfully only took a few minutes to come back up at 12:34. You only had to wait about 10 minutes or so. You got your next signal crossing the line here. This is the box where it closes. You enter a buy trade. Price moves up 35 pips, 5 pips of which covers again your spread that you paid. So there was 30 pips to be had here. So if you were looking for 20 to get out, you got it. It was simple. It was easy. No problem. Here you got a sell signal. You had a slight retrace, and then you were back into it. You can see what 10, 11 boxes, no sweat there. Easy 20 on that trade, plus more if you wanted to hang in. Here you get your cross. Again, you got an easy 10 before the retrace, and it turned back around and went back up again, and there was another 14 to be had. So it was about a 20, ended up being about a 28 pip move. You could have gotten 10 or 20 on this, depending on how you handled what happened right in here. And we're going to talk a lot more about that in a few minutes, okay, in terms of exits and when to exit and what to do about exits. What I want to talk to you about, though, right now are some traps that you can run into. And we're seeing one in front of our very eyes right now, which is actually kind of good, because now you get to see it in live action. Anytime you have a decent size move, and this is about a $7 move right here. This turned out to be about a $12 move there. That's a decent size move with gold, okay? And generally what happens is after that move, you end up in a period of consolidation. And while we still had a nice move back up here, certainly enough to get 20 pips out of it, we are now in a period of consolidation, and it is forming what I would like to call just a flag formation, although we're verge of breaking out of that right now. But you can see price moved up. We ran into a bit of resistance here. It moved down. We ran into some support, back to resistance, back to support, back to resistance. It's trying to break through now, and I usually use the third time's the charm. And if third time's not the charm, a lot of times fourth time is the charm, to break out. But if you are opening up your charts right now, and you can see that the buy signal is already passed, the optimal trade is to wait for the sell signal to come up. But if you are in a what looks like a very solid buy trend, and that certainly seems to be what it looks like right here, and you've got quite a distance to go before you're going to run into a real solid line of resistance, which would be up here at about 1329, you could jump in and get 10 or 20 pips out of this as long as you get the box to close. And like I said, the box looks like it's attempting to do that. It probably needs about another 20 pips or 2 pips, 20 cents to get up there and do that, 20 or 30. Let's see, this closed at 40. No, it'll have to close at 25.10. So about 30 more cents it would close. But when you run into one of these types of situations, the best way to handle it is to, you can use your tools and draw a line. You click on the line tool and, put a line across the top, put a line across the bottom, and wait for the breakout. Once the box closes on the breakout, there's your confirmation of the breakout, and you go ahead and put a trade in. Here we got the breakout, it closed. This would actually be a buy trade. I'm not going to take the buy trade because it's already 11 o'clock in the morning and I'm done trading for the day. But I mean, you could do that if the time was right, and if you were just sitting down to trade, it would probably be worth trading. There are other formations that you should look for. One of which is more of a flagged formation, and I want to get rid of these lines real quickly because they just kind of get things confused. For instance, over here, this is not really a great one, but I'm gonna use it anyway. You can see you have a situation here where there is a sort of a lower highs being set, while at the same time you have a nice flat bottom right here. So you have this sort of a pennant being formed right here. You wait for a breakout. You got the breakout. There's your pips right there as well. So if you're looking for flag formations, or you're looking for these flag formations, or you're looking for these pennant formations after some big moves normally, and once you've seen them, then you see the breakout, then you go ahead and you take the trade. Now over here, this would have been our buy right about right here. You can see it's up almost 18, 17, 18 pips at one point. So again, if you're looking for 10 pips, that was a classic example of a breakout from a flag formation. So we were kind of fortunate to see that this morning. The last one that I want to talk to you about, though, aside from the pivots and are the flags and the pennants, are just the lines of support and resistance that just sort of show up, and you have to scroll backwards in order to find those. If I can, trying to find. This is icy. Hold on a second. I have to move something. I'm not able to find the properties box that I'm looking for. There we go. I'm going to take it off of auto scroll, and if you're in a trade and you're wondering, what wow, trying the best way to put this. There are areas on the chart. Here's an area right here where this blue line is at. That's actually the 505 pivot line. That's just a coincidence because that was from yesterday actually. Here's two spots on the chart where price had difficulty getting past. Okay, now over here you're getting a buy signal down here. You can see you've got the crossing of the lines. You can see that you had an issue right here. There's two boxes here where price tried to break through and fell back. You have another issue here where price tried to break through and fell back. When you see these lines on the chart and you're getting a signal, and in order for that signal to even begin to move into profit, you have to get past one of these unofficial lines of support or resistance. A lot of times the best thing to do is simply just wait until you see it break through and then take the trade. You can have down here, you can see down here where it hit twice before it reversed and came back up. Again, that's a level of support, and if you're getting the sell signal in here anywhere and you need the price to get through this level right here before you get into profit, a lot of times it's better to wait and see if a box can close on the other side of that line before you actually take the trade. So flag formations, pennant formations, and then just unofficial lines of support and resistance, which are easily spotted using Rinkos. I mean, These if I can get this up here, this was 9:30 at night. This was at almost 11 o'clock at night, and so there's two spots here. That's easy enough to tell. You know, that's only a couple of hours apart. So if you're using a 5-minute chart or a 15-minute chart, I mean, it's probably pretty easy to spot on a regular candlestick chart. But you'll find instances where a lot of these points, you'll get 3 or 4 supporting points, and they're spread out over 13 or 14 hours. And you couldn't see that on a normal 5-minute chart or 15-minute chart, or maybe on an hour chart you'd be able to spot it. But anything smaller than that, it would be difficult. So this allows you to spot these points where there has been some resistance or there has been some support in the past. And then, like I said, sometimes the most prudent method of handling it is to wait until price breaks past that point and a box closes past that before you take the trade. So the last thing I want to talk to you about are exits, and I happen to mention that this is a very good example right here of a situation you're going to run into. You got the sell trade, you got the sell signal right about this box right here. If you sold, you would have been actually up, a couple of pips. You would have covered your spread and then gone up a couple of pips, but then price immediately turned around and went back up against you. I generally have a rule, which is if a box closes in the opposite direction on me, I get out. I don't like to wait for these for price to turn around and come back in my direction. The problem with doing that, and I'm sure many of you can relate, is that sometimes price goes an awful long way against you before it ever comes back. And I am of the attitude that since we are really only going for 20 pips in a day, I don't want to dig a 50 or 60 or 70 pip hole that it takes me 3 or 4 days to get out of before I can then resume my march towards my my overall goal of getting to 2,000 a day or 5,000 a day or whatever your goal happens to be. My preference is to get out whenever one of those boxes closes. Now, depending on what price action is like, since I do trade everything manually, I mean, sometimes, it shoots back up real quick, and before I can ever get down to click on the closed trade tab, it's already come back and is resuming, the march in the direction that I need it to go, and so I'll just sit there and hold off a minute and see if we get the box to close, and if it does, then, we're back in business again. Here it was almost 10 minutes before it ever got back down to rejoining the trade. So I took this trade earlier today, and I exited. I lost 16 pips, but once the price closed back down here and then showed that it closed beyond the small level of support that had formed because of the two boxes, and that was a few minutes after this box closed. It opened at 13.11, but it closed, and this one opened at 13.20. This is when I got in, and you can see, I mean, the 20 was no problem. As I was picking up another 16, I just held on and basically erased the loss and got my 20 in one trade. So how you handle that is up to you, and I go into a lot more detail in this in the PDF, so I recommend you read the PDF as well. But you will run into this situation on occasion where you have to make a decision: do I stay or do I go? And how you handle it is up to you. But I will tell you that if you do stay and you do ride it out, gold can turn around on you, and it can go the wrong way, and it can go a long way in the wrong direction, which can dig an almost impossible hole in your account for you to ever try to recover from. I mean, the only way to recover is to call the bank and reload, and you don't want to be doing that. You want to do this off of your you want to be winning. You want to be filling your account up courtesy of your winnings, not because you have to go back to the bank and get more money. Now, last thing I'm just going to show you here real quickly, because I know this has been kind of a long series of videos here. You're into about 45 minutes now. I want to show you just the crossovers and show you why we're using this and how effective it actually is. I'm just going to go back 2 or 3 days here. This goes back into Sunday night. We already had the crossover late on Friday as the market closed, but you can see that you have a continuing down pattern right here. This was a huge move. You had a crossover to the upside right here that really never went anywhere, and that happens. Like I said, you're not going to win every trade, but you got to remember too. This is about 9 or 10, 11 o'clock on Sunday night. You're not supposed to be trading on Sunday night, that late. There's nobody in the market yet to speak of, so you might want to wait until, everybody gets back to work the next morning. Around here is where London opens. You've got a little bit of a bounce around, but then boom, huge move. We get to this point in the day. Remember, I talked about some consolidation that takes place. There was a little bit of a breakout here. We moved back up into the consolidation, and then it took off like a maniac. This is 8 o'clock. This is when Comdex opens. The New York banks open. Huge move here. You got a buy signal here that took forever. Again, it's later in the day. You're probably not going to be taking these trades, hopefully, but ultimately there was 20 pips to be had here. You had a sell signal that you got right here. Again, some bouncing around, but easy 20 there. A buy signal here. That was an easy 20. You got a sell signal that followed up right. You get a swap right here. Okay, I think I just missed what happened. No, I didn't. Okay, that's it. Yeah, we got a sell signal at this point. Off it goes. You got a buy signal, easy 20. Sell signal here. This is where you only really got 10 out of this trade, but you can make it all back up on the next trade when you got the buy signal. You can certainly make it up on this trade when you got the sell signal. Down here, you got the buy signal. We saw what happened right here on the breakout. There was another 10. Like I said, that was fairly easy. So I think you can see without cluttering up your chart with a bunch of other crap and waiting for millions of confirmations or anything else. There are numerous opportunities during the course of the day to trade the crossover on the MACD, on the 2-line MACD, and pick up 20 pips. And as you saw in the earlier video and looking at the calculator, you can consistently make 20 pips a day, or you can win 7 out of 10 trades and consistently move forward on 20 pips a day. It's only going to take you a few weeks, and you're going to have an account that's going to allow you to start pulling out $500, $1,000, $2,000 a day. And that's the goal of this whole thing. So that wraps up this video. I will probably make another one down the road because I anticipate tons of questions from people. And when I start getting the same question over and over again, what I will do is I will make a sort of a back video, frequently asked questions video, and I will get that posted up there for now. If you do have any questions, send them to me at jeff@simpleforexsystem.net. And I'll get answers to you. And like I said, for the ones that I keep getting consistently, I will go ahead and post those up on the site as an additional video. So that wraps it up. Hope you have enjoyed your time here. I hope you've learned something new. I hope you're excited about this. I know when I first started trading gold, I was excited. That was over a year ago, and I am just as excited today as I was then. It has been kind of a return to the old style of trading from a few years ago when the currencies were really active like this, when the pound yen used to have a 300 pip average daily range. Gold has taken its place. And the only thing I've noticed is that it's actually easier to trade than the pound yen. It's not as chaotic as the pound yen was to trade. It actually is quite mannered, and it tends to break off on these long runs that are fairly simple to trade and to bank pips. So I hope it's got you inspired, and I hope you'll fund an account and start trading and actually start making some money from your trading, and do it what you got into this game to begin with for, which is to start making a living from your trading. So good luck to you. Got any questions, let me know. I'll get back to you as soon as I can. Thanks for watching. Bye-bye.